Most people spend their lives working for a paycheck, but the truly wealthy focus on owning the machines that generate those paychecks. Welcome to the Entrepreneur's Earning Catalog. Today, we are stripping away the jargon to understand exactly what a stock is and why equity ownership is the ultimate wealth builder. Think of a corporation as a massive pie. When you buy a stock, you aren't just betting on a ticker symbol, you are buying a legal share of ownership. If a company is divided into 1 million shares and you hold just one, you officially own 1/1,000,000th of that entire business, including its assets, its brand, and its future. Why do companies give up this ownership? Because growth requires massive capital. Rather than drowning in bank debt and interest, businesses sell shares to raise the cash needed to hire talent and build products. It's a fundamental trade. They get your capital to expand, and you get a claim on their future success. The first way you profit is capital appreciation. As a company executes its strategy and becomes more valuable, the price of your slice increases. The goal is the oldest rule in the book: identify value early, buy low, and sell when the rest of the market finally catches on. The second profit mode is dividends, true passive income. Established, profitable companies often reward their shareholders by sending a portion of their earnings directly to you in cash. It's a way to get paid just for being an owner, without ever having to sell your shares. Understand the difference between common and preferred stock. Common stock gives you voting rights, a seat at the table, but you're last in line if things go south. Preferred stock usually trades voting rights for priority payments in fixed dividends, acting as a safety net for your capital. Never judge a company by its share price alone. A $10 stock isn't cheaper than a $100 stock if there are billions more shares outstanding. You must look at market capitalization, the share price multiplied by total shares. That's the real price tag of the business, categorized from small cap to the megacorp giants. But let's be real, ownership comes with risk. There are no guarantees in the market. Stock prices fluctuate daily based on earnings, global news, and the fickle moods of investors. To chase high rewards, you must have the stomach to accept that volatility is the price of admission. To master the market, remember these three things. A stock is real ownership in a business. You earn through price growth and cash dividends, and market cap is the only true measure of a company's size. Master these, and you stop being a consumer and start being a capitalist. Knowledge is useless without execution. If you're ready to stop watching from the sidelines and start owning the economy, you need to know where actually buy these assets. I've mapped out the exact process for setting up your first brokerage account in the next video. Click it now, and let's get to work.